Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Precious Metals and Critical Minerals Conference. Our next presentation of the day is from Cerrado Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Mark Brennan, President and Chief Executive Officer of Cerrado Gold, which trades on the OTCQX Best Market under the symbol CRDOF and on the TSXV under the symbol CERT. Welcome back, Mark.
Thank you for having me, Greg, and thank you for OTC Markets for having Cerrado. Thank you very much, ladies and gentlemen. I hope we'll be able to provide a fairly straightforward presentation on Cerrado. As you can see on the slide, we're really looking to drive cash flow as we move forward, and we're going to do that currently with three operations. The first operation is in Argentina, where we're currently producing about 50,000 ounces of gold per year and making some pretty good money at today's gold prices. We've got a new project coming into development and a feasibility study to be completed by the end of the year at Lagoa Salgada in Portugal. And then we have a third project, which is looking for construction sometime in 2028. So a further development project with extremely robust economics to come out of Quebec and Canada. So these are our three assets. And again, our expectation here is that we're really looking to drive strong growth using our existing production to grow the existing operation in Argentina. As I mentioned, we're generating targeting about 55,000 ounces over the course of the next 3 years, looking for approximately $50 million of cash flow per year from that operation. We are looking to actually accelerate the growth of that operation over the coming 2 to 3 months. We're on top of that. We're now embarking on a 20,000 exploration program, 20,000 meter exploration program to grow by another 50,000 meters in 2026. And I'll talk to you about that in a moment. But we've been optimizing, growing, adding new production methodologies. It's a very, very exciting prospect with lots of growth. The near-term precious and critical metals production out of Portugal, Lagoa Salgada. This looks to us like a project that has lots of scope for substantial growth moving forward. But as I mentioned, we are looking for a construction decision in Q1 26 to be in construction by Q3 and then in production by Q1 of 2028. A long-term opportunity that we have and as a Mont Sorcier, high quality, high purity iron ore project with substantial robust economics with an NPV approximating about $1.6 billion, where we're looking to be able to drive that asset by funding through our precious metal production in Argentina and our precious metal and critical metals project in Portugal. On top of that, we've got a good balance sheet currently, about $16.5 million that we expect to grow by the end of the year. And we're looking for substantial cash generation as we go forward. We are also looking at an additional $5 million payment in March of 27 and a potential $10 million option payment by the end of 27 from AngloGold for the option of a project that they are working on in Argentina currently. If you look at where we've come from, in 2020, we acquired an asset in Argentina. It was producing about 20,000 ounces. 21, we took that up to 42,000 ounces, irrespective of the very difficult environment with COVID. And then we've taken that asset up to around that 50 to 55,000 ounces mark. And frankly, what we're looking at now is looking at production through 3 different methodologies on that asset and looking to expand the mine life as well as looking to expand the production profile that we have there. What I'm very proud about with this production growth is not only have we seen the production growth, but our cost of production is amongst the lowest in Argentina, even though it's a small operation. And I think that speaks volumes about the technical competency of our team. If we look at the company today, we're about 62% precious metals once we bring Lagoa Salgada into production. Basically, Lagoa has about 23% of the combined company's production, or about 42% of that asset is actually silver and gold, with a higher value of silver than gold. And from that perspective, we see some really good potential to grow that asset. The proposition that we'd like to make to investors is that currently we've got a market cap of $215 million. We've got cash of about $16.5 million. In terms of Argentina, we're looking to grow the cash flow with obviously higher gold prices. We expect to see cash flow around $50 million a year going forward at these prices. In Portugal, our expectation is to see cash flows of north of $100 million. And then Quebec, we're looking cash flows there somewhere in the region of about $350 million a year. So if we bring this all together, we've got some really big project potential, and we're going to look to fund this using our own cash flows, so we're not going to dilute our shareholders. Here's just an example of what we're looking at in terms of our growth. This is our net asset value growth with Argentina currently running about $110 million. Combining Portugal and Argentina together, that gives you about $260 million. That's using the old feasibility study for Lagoa that we're going to update by the end of this year. And then if you combine that with our project in Quebec, you just see the tremendous growth that we're looking at. At the end of the day, the combination of these, first of all, these two assets should take us north of 100,000 ounces. And then the final third asset should take us north of 300,000 ounce producer. And that will be by 2030. So we're looking at a vehicle, at a company that we see and have in our grasp extremely strong growth potential, no technical major risk that we can see, no funding risk because we can use our cash flows for funding risk as well as the support we're getting on the project finance side that I'll talk about a little later. But again, we're looking to get to this stage without a great deal of dilution. And this not only will have a substantial asset value perspective, but if you look at the right-hand side, we're looking at a potential cash flow EBITDA of about $500 million. I think it's fair to say that most companies that are trading at this valuation will hold a much more significant value than we're sitting on today. And we're targeting this growth to be by 2030. So all of a sudden, we're 4 years away. That's not too far away to get the types of returns that we think we can get. When I talk to many investors, I talk about the fact that we've been in a transition year in 2025. And people say, well, what does that mean? And basically what we've been doing is we've been looking to optimize our Minera Don Nicolas operation in Argentina. We've added a heap leach operation that we've now taken to the capacity of about 4,000 to 4,500 ounces per month. We're also looking at a very significant development with our underground development. We're starting mining underground. We started the underground program in June of this year. We're going to look to grow that operation. The development will also look to do underground exploration. And that'll be totally separate from new surface exploration to the tune of about 70,000 meters. The objective that we have for this program, and what I'm hopeful to be able to show the market very soon, is that we'll be able to prove, we'll be able to look at a 5 to 6 year mine life with the possibility of looking to expand that production to higher levels, which, in terms of our own internal targets, we would like to see this project, at least 50%, if not 100% bigger than where it is today. At the same time, we've also been looking at developing our development assets, and Lagoa Salgada is the lead project. We completed a optimized feasibility study, a feasibility study in 2023. Where we're going now is we're going to complete an optimized feasibility study. We're seeing higher grades, higher recoveries. The metallurgy has been far improved, less deleterious elements. And so we see this ready to go to be a very, very robust project. In the feasibility study we completed in 23, we had basically an NPV of about 150 million with a capex of about 165 million. Our expectation is to see the numbers materially improved. Also, by the end of this year, we're targeting for the environmental impact assessment permit to be approved, which will lead us to the construction kind of phase. First of all, we'll look to funding and also the detailed engineering, and then look to construction in Q3. Our expectation here is to be in production in Q1 28. And again, looking at cash flows, the 75 millions with the old feasibility study, I would hope that those will be no less than at least $100 million a year for a very good long mine life. Once that's complete, it looks like it'll be time for us to move forward on construction with Mont Sorcier. In 2025, we've embarked upon a feasibility study. This should be completed by Q2 of 2026. We're using some of the best engineering firms in Canada in Quebec for this project. We're going to complete the feasibility study by Q2 2026. You may have seen a press release we issued about 3 weeks ago. Our expectation here is we're taking this project from a 5 million ton per annum operation, and we're going to split that up where in the first 2 years, we're going to do 4 million tons and then grow that to 8 million tons in year 3. So we see some very, very strong, robust economics. And one of the new aspects on this project is that we've actually gone to a high purity, high grade material. So instead of producing 62, 65% material, which is somewhat more conventional, we're actually going after the very high grade market, high demand market, growing about 9 to 10% per annum, where people are trying to get their hands on this and they can't. And it trades at about a 35% premium to conventional iron ore. So once we complete the feasibility study in Q2, we'll submit our permit by the end of 2026. And our expectation is by 2028, because of the lengthy process of environmental permitting in Canada, we'll start the project funding side in Q1 2028. I will mention that we have, as we have in Portugal, we've got the UK Export Credit Agency indicating support for the project, for project funding, for 70% of our capital requirements. In Portugal, we're working with the Santander Bank to lead that process. And in Quebec, we're working with TD Bank to lead that process. Our expectation is to have the permit and construction beginning in Q2 of 2028 and into production in 2030. As I mentioned earlier, our free cash flow there is approximating about 235 million a year. That's based on our PEA done in 2021, which was looking at 5 million tons. And so if we're looking at 8 million tons in year 3, I think that's going to be a substantial improvement on that, as well as the 35% premium. We're going to see much more significant numbers as we move forward. Just to delve a little bit deeper, in Argentina, we're on the Desierto Massif. We have a huge land position, 330,000 hectares. It's almost the size of Rhode Island. We're next door to Pan American Silver's Cerrado project that produced somewhere in the region of about 3 to 4 million ounces. It produces today at about 150,000 ounces a year. I'll mention that they have the exact same plant size that we have. The fact of the matter is they're just getting better grade. And I think with our exploration program, we're really focused on improving better grade. To the south, you have Anglo Gold's Cerro Vanguardia project. It's produced about 8 to 9 million ounces to date. And then to the northwest, you've got Newmont's Cerro Negro project and some other projects as well. So we're in a very good district. We're very new to the district. And I think that this next slide will show you just how far we've come in such a little amount of time. We're on the right-hand side. We went into this project in March of 2020. COVID struck in the last week of March. We were really handed a very difficult time where basically Argentina was one of the most severely impacted with COVID restrictions and the inability to travel, to bring labor in cross province, importing, exporting. It was a very, very difficult challenge. But nonetheless, we did our work. We brought our production from 20,000 to 40,000 and to 50,000 ounces. Most of that was from open pit operations. As you can see, the black area here is the underground, which we've just started. And then we've also now started a very significant heap leach operation that you have in silver. And our objective here is, again, to produce about 4,000 to 4,500 ounces a month out of this silver out of the heap leach area. And then the underground, we're still too young to understand all the parameters there. But then, and likewise on the open pit, we're looking to grow that with our surface drilling of that 70,000 meters. But if you look at where we are in 2020, look at how long the granddaddy of the belt has been there. Cerro Vanguardia went there in the 90s, in the early 90s. It took them a long time to get to their critical mass. First of all, to the just over 1 million ounces, and then to 4.5 million ounces. They started predominantly with their open pit operations, went to a little bit of heap leach, and now they have a combination of heap leach in the gold and in the silver underground, in the underground in the black, and then the open pit elsewhere. But these guys have been the longest producing, most successful there, but they've been there for 35 years. Next is Newmont, what used to be Goldcorp's asset. Newmont at Cerro Negro, they've gone pretty much underground from the start, but they're sitting on about 6 million ounces of gold. But they've been there again, another 15 to 20 years than we have. And then Cerro Moro, with what was once Yamana's project, they're developing underground and open pit operations. And so you'll see that what we've been able to achieve is if we've been able to go to all three mechanisms of production, underground, open pit, and heap leach. We've been able to do this at almost a cheaper cost than every other mine in Argentina. And again, I think that just speaks to the skill set that we have. We're very interested in growing this operation. We see lots of growth. We're not promising that it's going to be Cerro Vanguardia or Cerro Negro, but what I will tell you right now is that we can't promise you that it's not going to be either. So, that's a little bit of arm waving and flag waving, but at the same point, it looks very, very prospective to us. And now it's the first year where we've had capital to go and build an exploration program of any size. Again, this is just showing you the growth that we've had in our production costs compared to many other mines that are much bigger than us in Argentina, which I'm very proud of. The technical team. We completed a PA, which is really for the heap leach operation. It was already in operation as we were building the PA, but it was a formal report that we could put out. You can see the economics are extremely robust. And we're expecting that we've got 2 to 3 years of continued production out of our existing operations that basically will generate $50 million a year at current gold prices. Now, if I look at where we're going to go in terms of our growth, here's the heap leach operation. We see other opportunities and possibilities to grow this heap leach operation, to extend the mine life of the heap leach operation. And we're working on that right now. And I hope that we'll be able to provide indications of how we can do that in the next 60 days. If I look at but for now, we're looking at 4,000 to 4,500 ounces a month. I look at our next development that we've started, the underground at Paloma. We mined this underground pit for probably the better part of 1.5 to 2 years. We were pulling out about 8 to 12 grams per ton. It was very difficult to drill for exploration from surface. So what we've done is we've now opened this up as an underground operation. And the fact of the matter is that we're looking at this to become our next stage of really substantial growth. We started the operation in June of this year. You'll see some good production coming from underground in the month of December, and you should see some good growth coming out of this in 2026, as well as some strong exploration. We've now drifted the development over to the mining stopes, the high grade stopes, and what we'll do is not only will we mine that, but we'll also develop drill pads where we can drill our exploration. But we see lots and lots of growth for this operation here and otherwise for underground, as has been seen throughout the Desierto Massif. This ranking #1 area, this Paloma area, is very, very hot. We're finding evidence of gold everywhere we go. It's just a question of prioritizing and being able to drill as much as we want. We've announced recently that we've acquired 3 new drill rigs. We were working with 1 rig, and unfortunately that just didn't give us the ability to penetrate as much as we would have liked. But frankly, with the 4 rigs that we'll now have on site, we should be able to put together a strong program. We're also looking to certify our lab. Basically what will happen is with that certification, it'll reduce the time that we get back for assays. So that's another cure that we're trying to impose to really speed up this exploration. So we see lots of potential and the areas that we see, again, focusing on the surface exploration. This is where we're going to see the 70,000 meters. You can see that it's spread throughout our property. If you look at this Cerro Moro here, this is a big to the west, to the east side of us and to the west of Pan American Silver's property. This was a big discovery by by Yamana called Nati in 2019. And we haven't even had an opportunity to get over there. We haven't gotten down to Chispas, which also looks highly prospective. So we've got lots of different areas that we can look to grow. There are going to be lots of areas that are barren and not so appealing. But from that perspective, we see lots of potential for growth. Which moves next to our next project, the Lagoa Salgada project. This is essentially a polymetallic mine. What we're looking at is very high content of silver and gold. It's got zinc, it's got copper, tin, and lead. And the fact of the matter here is that this project, in its current format, in its feasibility study, it will be one of the lowest cost zinc producers on a zinc equivalent basis. Of any, of most mines, it'll be in the lowest 10% of cost for any mines in the world, and that's what we like to do. We like to find projects that are good size, and yet at the same point have the potential for lots of growth. We're looking probably at about the equivalent on the previous feasibility. We're looking at about 120 million pounds of zinc equivalent, or about 50,000 ounces of gold equivalent. And what we believe is that we can grow this from our current 27 million tons. We think we can get this, and our objective will be to get this up to 4 to 5 times the size over the coming years. And we're starting, again, more exploration coming into 2026, which will give us the ability not only to drive this project into construction and into production, but really to drive value for the project as well through growing it. We anticipate that the feasibility study will be published just after the new year. What we're looking at is the announcement of the environmental impact assessment, the permit we should get by the end of the year. So from that regard, we've got a lot going on there. We'll anticipate being in construction in the third quarter of next year, to be in production by 2028, which is not such a long time from where we are. As I say, the project is extremely robust. We had an NPV of about $150 million, an IRR after tax of about 39%. The new feasibility study, we're expecting to be more robust and stronger. We are looking at EBITDA of about $75 million under the old program. Again, we believe that the numbers will be better in this new feasibility study. We also see the resources hopefully growing as a consequence of the improved metallurgy that we've done. So everything is looking very, very positive on this moving forward. Here's the timeline I've mentioned to you a couple of times. Again, construction within a year from today, and production by early 2028. These projects tend to grow in pods. We right now have a north pod and a south pod, and our objective here is to really grow like the other projects on the belt. And largely these projects are discovered and they're grown through geophysics, and that'll be through IP surveys or gravity surveys. And we see lots and lots of scope for growth. We've just completed a program sponsored by the EU. They put about 3 million euros into the program, which is a lot of money for an IP program and a geophysics program. We'll get the results probably sometime by the first quarter. We're already seeing indications of what, confirming what we believe that we see in these graphs you can see in front of you. Extremely robust, extremely strong potential for new opportunities, as you've seen at Boliden that took over Neves-Corvo, which was owned by Lundin, and also by Aguataninas, which is now owned by Sandfire, which was formerly owned by Mubadala and Trafigura. I'll mention that when Boliden acquired this project from Lundin, they took a lot of the supply of zinc and other metals away from other European traders and refiners. So there's a great deal of demand right now for product coming out of Europe, and we think we're perfectly positioned to bring that product to them. The final project I'll discuss is the Mont Sorcier project. This is in Quebec. It's a high purity, high grade iron ore. Infrastructure is amazing. In iron ore, you need infrastructure. We've got a rail line 15 kilometers away. It goes down about 370 kilometers down to the port of Saguenay, and all weather, all deep sea port that basically doesn't have any customers currently of long-term standing. The rail line is running at about a third of capacity. So we have a very easy influx into this pipeline. And our expectation here is that the economics that we see in the PEA that we completed in 2021, irrespective of inflation, that will drive up prices. One of the reasons we look to move away from the 5 million ton scenario to 4 million tons now, and then another 4 million tons after year 3, is because we do see inflation. But our expectation is that the NPV and the economic returns are going to be the same on the basis that we have this higher grade, higher premium product that everybody is really looking for at the moment. We've got a big resource here, 1.1 billion tons. We can double that. We can expand that. The fact of the matter is we need, for a 20-year mine life, we need about 430 million tons. And that's for the 8-year mine life scenario. So we can rapidly and easily expand this project even further as we move forward. So from that perspective, this is a project like the other projects. It's still pretty young. It's easy. All the mineralizations that surface. The strip ratio is less than 1 to 1. There's nothing complicated about the process. We're using all the same technologies that exist today, the same methodologies, and that's the same for all our projects. So we're not reinventing the wheel, which makes it a lot easier on management to complete that. As I mentioned, we've got a very strong cash position right now. It's going to grow by year end. We're also looking for more cash to come in, but also we're funded for both projects, development projects. We have support, indications of support from the UK Export Credit Agency, for project funding up to 70%. We believe that we should be able to get an offtake. We believe that we might be able to get a stream. So from that perspective, there's lots of potential to fund where we're not going to dilute our shareholders. We have a management team that have done this before many times. We've succeeded in building projects from scratch, some of the best projects in their categories in the world. We've actually made a lot of money for shareholders. And, we believe that this is one of the best opportunities we've had to really grow a business. We've got about 135 million shares outstanding, a 215 million market cap. Again, with about a 16.5 million cash position after our last quarter announced Friday. We're in very, very good shape and foreseeing very strong growth from our 3 assets. I do want to leave a little time for questions. So I'll just quickly run through the questions. I'll go in order. One of the positions that we've also done is there's a question here. We've repaid a meaningful amount of debt, the target debt level, and when do you expect to reach it, assuming current gold prices? I would say that we've reached the net debt level. If you look at our balance sheet, it's a little bit complicated from the fact that we have streaming facilities and notes associated with those streaming facilities. But if I look at our actual debt outside of our working capital debt, such as payables, which are always going to be the same, or they're always going to exist while we're in production, we're probably running at about a $20 to $30 million debt position in terms of notes and debt. And frankly, I'm pretty comfortable with that. Now with the market cap of $200 million, we're not over levered. And the fact of the matter is that, for our revenue base of about $180 million a year, we're pretty comfortable with that level of debt. So I think our balance sheet, and that's not including the $17 million of cash we have right now. So from that perspective, I'm pretty comfortable that we've accomplished this financial stability. I'm asked, once the permit for Portugal is received, is there a risk of not receiving the construction permit? Very, very low to no risk. Once you have that permit in your hand, you've gone through most of the issues of the social and construction and environmental risks, which are the most significant. The recap risk, what will happen is when they give us the initial permit, they'll say, hey, here's your permit, but we want you to make these changes, most of which are small or modest technical changes. As you saw, we applied under Article 16 to make a couple of changes. We removed arsenic from the project, cyanide, from the project in its totality. So I don't see a lot more issues that they can see as great risk. I'm asked a question. We see significant free cash flow upside at higher prices. We currently have a hedge program where we hedge about 2,000 ounces a month. We're actually getting rid of that. That hedge program goes away at the end of the year, and we're going to fly solo. We're going to fly, we're going to fly and go with the markets as they are. We could see a 10 or 20% correction in gold prices. We're trying very hard to bring our sustaining costs on the gold down to that 1,600 mark. Hopefully we get there. But even if we see gold prices go down by $1,000, we're still making quite a bit of money. And we don't see any real major environment where gold prices are going to come down significantly. Probably the biggest one for me is I still see, the central bank in the U.S. Is going to lose. The Fed is going to lose Powell. They're going to bring somebody else in. I think it's going to be a much more dovish bias where they're going to be lowering rates further. And I think that'll only be good for gold. And I don't see central banks not, reducing their purchase of gold, and nor do I see gold reducing its safe haven quality. So I think gold is still in a good place, and we continue to be very bullish. In terms of Argentina, Portugal, and Quebec, what is the most significant jurisdictional risk? I guess what I would say is environmental is always the biggest risk, and social risk of social acceptance. In Quebec, we have a very strong and very positive backing of the community, of the government, of the First Nations, with the Quebec Cree, who have been very supportive and very positive with their approach and pragmatic with their approach. It's not going to be, they're not going to give us a free ride, but at the same point, they'll make it as long as we adhere to first base principles. We think we've got a good chance. Portugal, same thing. You've got to partner with the community. You've got to partner with the government, and everybody has to be a beneficiary. Everybody needs these critical metals. But the fact of the matter is that, as you know, everybody says, not in my backyard. And what we're trying to do is make sure that we're as least, providing us the least exposure or ramifications to that production profile that we have. I think I'm kind of out of time, but I guess in terms of what I would say is that we're very, very happy to address any of these questions that anybody may have. If you want to ask us directly, please don't hesitate to approach either myself by email, Mark M. Brennan at CerradoGold.com, or Mike McAllister, our head of IR, M. McAllister at CerradoGold.com, and we'd be very happy to address any of these questions that you may have. I see that there are questions, additional questions, and I will try to work with the OTC and see if I can't get responses to you directly. On that note, thank you all very much for your time and your attention, and good luck. Thank you.